And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. A little musical suggestion there this morning, a little Take the Money and Run by Steve Miller. Happy Friday, everyone. It's Friday, April the 22nd. I'm John Hoagland. Thanks for trusting me with your time. Obviously, markets are offering opportunities, and we're here to try and figure out where those opportunities are by seeking good context, always thinking about risk management, and remaining patient. If you're in the markets already this morning, hopefully things are going your way. Not a lot of economic information or earnings out today. 8:45 this morning, we're looking for the PMI composite flash. This is a view of what the next PMI is going to look like. Whether it's going to be impactful or not is yet to be seen. I did have one question on one of the comments after the forecast, and it was about settlement. Settlement is not always going to be that last price at the end of the day, at the end of the regular trading hours. That last price would be at 3 o'clock, per se, in the S&Ps, 1:30. Of course, these are central times in crude oil. So if you're looking at that last price for the settlement, you're not going to be too far off. Settlement was always, there was a closing range in the pit. It was the last 30 seconds. 30 seconds before the end of the day, a bell would ring, you were in the closing range, and all your MOC orders, anything that had to be done by the end of the day, had to be done in that last 30 seconds. So what the exchange would do, they would take a look at the range of that last 30 seconds and find something in the middle that everybody in the pit would agree on as to settlement. So it's not necessarily the last price. It's a average and about of the last approximately 30 seconds of the trading day. You're not going to be too far off if you're looking at that last price. And like everything in futures, nothing is finite and nothing is 100%. All right. As far as what traders are focusing on, at least what I was looking at this morning, stocks are set to open, and it looks like largely lower, mixed for a little while here this morning. But a lot of this movement yesterday was, of course, exacerbated by Powell's comments ensuring a 50 basis point increase in rates at the meeting in May in just under 2 weeks. The dollar and the treasury rates popped up to the upside. Earnings are thin today, being Friday. Focused this morning on Verizon and Amex. Really nothing impactful after the close, just a couple of them. Crude prices remain overall stable, I would say, for the week. The Chinese demand is certainly in question due to the COVID lockdowns that they've got going on over there. And I remind everybody, pray for peace. Russia has now expanded its quest for more than just the Donbass region of Ukraine. They need our support. Please pray for them, and God bless us all. As always, hit the lucky like button. Share, comment, question, feedback, heckling, and love are welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. VIX, we started yesterday down below 20. We're starting today right around 23.01. The dollar index higher again this morning, 100.9. And the yield on the 10-year, 2.9, getting up to that 3% level. I think we've actually seen a little touch of it earlier this morning. Yeah, Steve Miller from Waukesha, Wisconsin took his first guitar lesson from Les Paul himself. Absolutely. Of course, my brother knows that. All right. Going to say good morning to everyone, of course. It's a great pleasure to see everybody. I wanted to mention what happened in Make Hogue Money yesterday. The S&P is open, leaving the opening range at the low of the session, which I think was a bit of a surprise for many of us. We had a bear flag that was forming for the last couple of days. The last couple of days were kind of hollow rallies. The market wasn't building open interest; it was losing open interest. So I think a lot of us were probably thinking, well, this is we've got an opening range at the low of the session. We haven't broken out below that trend line. We're going to see that trend line here in the S&Ps. What a great opportunity to the downside, and then of course exacerbated by Jay Powell. So we had a couple of small losses. By the time we ended the session, we had two trades. They were both losses, one for $200, one for $150. So it was suggested that if we were to break out below the low of the opening range, there might be a good opportunity there. So we set that up before the end of the session, and I managed it for everybody. Now, there were two specific profit targets to the downside, and they were about 20 points apart. One was for a 20-point profit, one was for a 40-point profit. The naked point of control from the TPO profile yesterday was right in the middle of them. It was exactly at 30 points. So I split the two, and we took that trade. We had to take a little bit of heat to stay in it, but I was pretty confident we were going to see some more downside, and we ended up taking 30 points on that. So it's a $1,500 win after a $150 loss and a $200 loss. So a pretty good success for us yesterday in Make Hogue Money, and thank you very much. So, good morning, Shaw, first in the room. You win the prize. Theo, good morning. Brian, James Swan wasn't patient. The market had a word with me, and I'm just going to sit on my hands. Patience pays. It's so difficult to try and sit and watch while things are going on, and we feel like we're missing things. It's suggested that I saw something that the best trades aren't the ones that you have to take. They're the ones that make you take them. Be patient. Look for those good opportunities. Always be thinking asymmetrically. Small losses for bigger risks, or small losses for bigger rewards, I should say. And wait for those trades that say this one you gotta. This one's telling you this is a good trade. And as you get more experience and more intuition, hopefully those will be easier to recognize. It's never easy to recognize real intuition versus impulse. Good morning, Scott Saw, and you conquered, I hope. Tachyon, good morning, my brother Rick. Love you. No trading today for Tachyon, just browsing possible trades. Yesterday lost 2K. Next week, focus on improving discipline. And discipline is such a buzzword in futures, isn't it? It's like discipline, willpower. It's the ability to always be thinking and acting in your best interest. When we lose our discipline, we lose our willpower to remain disciplined, we take ourselves out of the ability to be cognizant of our trades and to be disciplined. It's like quitting smoking. Trying to create discipline is something you have to do every time you think about it. So think before you do anything. Is this in my best interest? Say it out loud. Is this in my best interest? If you can't say yes, think about waiting for the next opportunity. Devont, Bill, Liam, good morning. James, Kevin, good morning. Kevin Laffey, is that you, Kevin? Send me an email, jhoagland@topstep.com. I'd love to chat with you. Vince, good morning. Zachary, Marcelo, happy Friday. Yes, yesterday I just kept scaling in using sell stops just below relevant levels, catching all of those faders. Never done it before, and it worked like a charm. So I think you're saying scaling in using sell stops just below relevant levels. So you were the opposite direction. It's the way that sounds to me. So you were just finding bottoms and taking profits when they were available. It's the only way to make money on a down day like yesterday, if you're talking about the equities. Federico, Laura, good morning. Ron Stoneberg, Charles March, Andres, George, Wen, James Harry, beautiful morning. Sarah, a beautiful dawn, and prayers and love to you as well. Expediter Dean Jacklow. Loving the tunes, Scott saw. Yeah, well, I'm not sure if I can get in trouble for like royalty, anything like that, but I'll risk it once, maybe twice. Zachary, good morning. Luis. Oh, yeah. Make sure you close your positions before the close, and make sure you're not leaving any orders working. Any of the orders working. You want to make sure and hit pull all and liquidate. Vince, yes, we got the band coming here. The risk takers, the risk managers, risk takers, risk manager. I forget what it was. We'll check it out. Glimmer Sandwich, good to see you. Liam, wish I could have taken the money I ran yesterday. Got up really nice on the 10-year and then gave back half to the S&P. I'm okay with giving back half of your day and then walking away. You're still a plus player. Joe, good morning. Three Lions Insight. James Swan, Sarah Hall, Zachary. Bought inverse Nasdaq ETF yesterday morning. Wow, that's going to be a nice profit for you already. That's pretty tasty. Much respect, Tachyon. Shows a lot of character. Absolutely. Aviv, David, Dr. VJ, good morning. Nicholas, you were talking about picking the bottoms and taking profits quickly. Maybe Trades by Matt was doing that 2 days ago. Gallo, Dan Emmons, another day? No, not another. Take it easy, Dan. Take it easy. Stay patient. Stay patient. Nicholas, trading research. And Tachyon. Funny thing, I waited for that experience. Was thinking without it, you're yet to be baptized by the market. Well, at some point in this game, in this world of futures trading, we are all baptized by the market at some point. Some of us more times than others. I think I've been baptized about 100 times. Today is the last day to enter into this week's chapter in this year's trading book. Let's take a look and see what we can find out here. I've been yammering on a little bit long, but let's see what we've got. So here's the daily in the S&Ps. So, are we back in balance here? I mean, we were looking for a breakout to the upside on the daily chart here. We got our breakout, but it did not bring fulfillment, if you will. Volumes started to get slow. Open interest was falling. Yesterday on this breakout down below this bear flag, the continuation, the volume adding 17,000 in open interest. Certainly seems that the market is struggling to the upside and getting a better auction to the downside. It's been weak up moves, better down moves, open interest increase, down day monies, a higher volume. All of those things are lining up for better downside auctions than upside auctions. However, we know that these markets without bad news have a tendency to grind shorts to a pulp. Well, that didn't happen yesterday, but we're here now, at the low end of balance that we were looking at earlier this week. We've got last week's low in play here. We've got our this week's low not too far off from where our overnight low is. That's 43.55 half. So got about $7 before we get to this low. What are we looking at? I think we're pretty much inside. No, we are overlapping lower in range. Here's the 30. Here's that almost a gift of a trend line on this bear flag, I should say. Lower volume open interest, smaller range. The market opens, looks higher, fails, looks below this trend line, and boom, there it is. Here's the TPO chart I was looking at yesterday when we were when we were looking at our opportunity yesterday. We had an opening range that was left at the low of the session. We looked higher. We couldn't continue higher. We took out the low of the opening range, which is approximately right here, 94 even. And then our point of control from yesterday was right here at 64 approximately. It's a little different here. There it is. Right there. There's our point of control. That's where we got out of that trade. 76, I think, was one target. 55 was another target. I figured, well, we got the point of control. There's a pretty good trade. We're going to just take that. Who knew that we were going to continue on this move to the downside? But it could have been somewhat recognized by the break of this bull flag, taking us right back basically to the base of that bull flag. Where are we now? Well, we're sitting here with no overnight inventory. Are we going to open with a gap or aren't we? We've got some pretty good space down below this week's low, and we've got a whole bunch of repair that can happen in this very emotional day from yesterday. Lots of areas of single TPOs, lots of high volume nodes, lots of low volume nodes. This all bodes for repair at some point. Who knows if it's going to happen today? Where is the space down below? Space down below is all the way to 43.20, which is currently this week's weekly kickoff low. If we start to move lower, that's my visual target. If we start to move higher, repair throughout the day yesterday. Joe, I think we took about 4 or 5 points of risk, a little bit more risk than we were taking earlier in the session. But when we got in that trade, I said, this thing is, the upside auctions have been weak. If we can get down below that trend line, I think there's a much bigger opportunity, which obviously there was. And I was looking at what I was instructed to do was between 75 and 55 to look for a target. So that point of control from yesterday seemed like a very logical target, and it was a good trade. And I'm happy that the team was able to provide that. All right. So what are we looking at today? I'm looking at our overnight high and our overnight low seem to be areas where I would probably be starting to look for fish. I guess it depends on if we do manage to open with a little bit of a gap or if we open in range and in value yesterday. So yesterday's value low of the range. We've got some confluence there. We've got last week's low. We got our overnight low just below that. This is pretty rangy though. I'm going to try again and stay patient. If you had a good day yesterday, there's nothing wrong with seeing if you can take a little dough today and take the money and run. Let's look at crude oil. We've missed the opening range trade here. I apologize for my earlier yammering. So this market continues to, I mean, I kind of call this idling, right? It's kind of bouncing back and forth, staying pretty much true to the new pennant formation that we're in. We're putting in lower highs, we're putting in higher lows. This market is coiling and we're looking for new information. Yesterday we lost 5,000 in open interest. We're now through with rollover. Thank goodness. Volume was a little bit lower. We lost a little bit of open interest. We're not seeing anything that's pushing this market to expand behind the current market state. Short time frame control, indecision rules, current price location seems adrift. Take a look at the 30. Okay, we had settlement right up here. 103.79 is settlement. Most of the overnight, we've been trying to push this market lower. If we can't continue to push this market lower, we can come back into range and into value and just kind of do that. Now it's looking like the opening range is the high of the session, which would have me continuing to look for shorts. We've opened in range below value. We're attempting to reject yesterday's range. Let's look at the opening range here. So no, we did look one little look above the opening range, failed to find business. Business is now to the downside. So we are rejecting value, rejecting range. We can certainly take a good look down to our overnight low or this swing low down here from 2 days ago. Nasdaq. All right. The Nasdaq never really did leave that area of balance that we were in the S&Ps that we looked above. We had trouble doing that here in the Nasdaq. We've been range bound all week. Now we're at the low end of that range. We're at the low end of weekly kickoff range. Okay, we've got weekly kickoff low 13,715. We're trading 13,717 right now. This is going to be somewhat pivotal for us. Remember that weekly kickoff level, 13,715. God, we're just hanging right at it before the open here. Space below. Certainly some space down below. We've got, two very long bars, and that's going to open up space to the downside if sellers do continue to take this market lower. We've got space on the upside and possible repair on the upside as well. This weekly kickoff level, which we did not close below, settlement was 13,728 and a quarter. Let's see this on the 30-minute chart. 1378 and a quarter. We don't really have any overnight inventory. We're holding in the low end of the value area from a very imbalanced day yesterday. Value indicating that there's a balance there. There is none. If we can't hold above weekly kickoff high, I'll look for continuation to the downside. If we don't gap, if we can't leave the value area from yesterday, we may find that the market is going to offer an upside opportunity, which gives us the chance to come back and repair some of the missing teeth that we have in this profile yesterday. This is a very emotional day. We did add 2,300 in open interest. I don't remember if I mentioned the S&Ps. We added 17,000 in open interest on a down day, on a push to the downside on higher volume, especially after seeing lower volume and lower open interest on these pushes to the upside. All right. So as we get closer to the open here, we'll be watching to see where the Nasdaq opens up. Of course, our overnight low, overnight high could be somewhat important to us in the short time frame. I'm looking at weekly kickoff low here, 13,715 as a pivotal level, short below, long above. If we treated it that way last night, we got cut to ribbons. Be careful doing that. All right, well, sounds like the landscapers have arrived next door. I may have to talk to them about that. Maybe put on a little music so we can Not have to hear that. Okay, gold. The dollar is strong. Dollar is strong. That's knocking gold off its little high horse here. Well, that's been happening for a few days, pushing the market right back into this area of balance that we were stuck in for 1, 2, 3, almost 4 weeks, almost a month. We were stuck in there, into rollover and after rollover. We've attempted to break out to the upside. We're back in that area. 1952 weekly kickoff high, important inflection level. 1924, the fact that none of these bars closed below that level, to me, shows a degree of balance. All of these long shadows down there says every time we got down there, buyers were swift to come in and reject that level. So there may be some fish down there. Let's take a look at the 30-minute chart. We lost 2,200 yesterday in open interest on a day. We did sort of put in a late spike, but this is after the regular trading hours opened or regular trading hours close, and we're rejecting it anyway. We've opened with a gap. We've been unable to close that gap, I believe. No, I think we did close the gap, but finding it resistant now. As long as we stay out of balance, I think the opportunity may be to the downside, but if we can get back into balance and value, that's going to change things a little bit. My dream location would be back up to 1952. I don't see that we're going to have that opportunity, but what a chance we had yesterday, right at it. 1951.80, within 2 ticks of it, and the market continued to push to the downside. That was a pretty decent opportunity of about 100 ticks. If you were there and if you recognized it and you took it, God bless you. God bless you. All right, these guys are killing me with this noise. I don't even know if you guys can hear that, but it's very distracting. All right. Let's take a look at the euro with the dollar strong. Of course, the euro kind of still maintaining the support level of weekly kickoff low here of 107.80. We tested down to it on Tuesday. We tested down to it on Thursday of last week, really finding some support there. We tested to the last week's high yesterday. This market really kind of adhering to some longer and shorter time frame levels. What did we do yesterday as far as open interest is concerned? We added another 4,000 contracts in open interest on the push off of last week's high. Take a look at the 30, see if we see any opportunities. Oh, good, Ray. I'm glad you can't hear that. It's very noisy and distracting. I apologize if you were. So overnight inventory was shortish. Not anymore. We've come back to the beginning point of the overnight as well as settlement price, which is, by the way, 108.60 and a half ticks. Settle our weekly kickoff low down here. Really becomes, are we going to reaccept inside value after opening outside value? Value area special situation play is possible, but again, it's got to be upon acceptance of value from yesterday, and acceptance of value is a very subjective term. Okay, when we open outside of range and value, the way I learned it was I needed 2 30-minute bars to close back inside value to initiate the value area special situation play that says if we do reaccept value from yesterday, there's a high probability of at some point during that session price rotating back to the high of value. We need to find acceptance inside value for that to become true. So far, we're seeing nothing but rejection back inside value. So this value low yesterday becomes an important inflection level for us to look for possible opportunities today. The value area special situation trade is tricky at best. 10-year. Well, we know rates are going higher. It's just a matter of timing and location to try and continue to look at this market for opportunities to sell strength. We lost open interest yesterday on our first close below weekly kickoff low. Yeah, 1900 was our first real close below that. So are we going to start to see open interest and volumes start to increase in this move to the downside? When we look at this, we've gone from the upper left corner to the lower left corner in a pretty straight shot. I still kind of fear the face ripping profit taking rally, especially on Fridays, may not happen. We have lots of irrational fears, and that's one of mine. We're still looking to sell strength. Settled below weekly kickoff low. Here, let's take a look at the 30. Any overnight inventory? Here's where we started. We've been to it. Mostly inside range and inside value tells me I need to try and stay patient and look for better trade locations. Loving the idea that we might get the opportunity to see a chance for an execution up near weekly kickoff low, which is again is 119 even. Lines up relatively nicely with value high from yesterday. Our overnight high was here. Now we've expanded that to the upside just a little bit and fallen off. We're in range and value. I'm going to try and stay patient. I got to keep telling myself I'm going to try to stay patient because I can easily cut myself up and take myself out of the game before a real good opportunity comes my way. If I go looking for those, I know I'm going to find them. Like my good friend Ray says, I'm going to sit back, lie behind a bush, and wait for a three-legged wildebeest to come by, and then I'm going to pounce. All right. Nat gas. Here's the daily. Now we know we've got reversal patterns here. Bearish engulfing pattern. We got a island top. Okay, the market pulled off. It seems to be taking a bit of a rest. Today, I'm still looking at the May contract. Tomorrow, Monday, we'll be looking at the June contract. The market is in rollover, and that may do a lot to keep the market somewhat relatively range bound. The longer time frame traders are going to be more focused on getting their rollover done cheaply than worrying about directional activity, which does not mean that they won't get pushed into directional activity. Volume, it seems slower, but this can be a function of rollover. We lost 3,200 in open interest, also quite possibly a function of rollover. Rollover just complicates everything. So we're going to be trading what we see. We're inside extended trading hour range right now. Well, no, we actually looked a little bit lower from the extended trading hour range from yesterday, but we're still opening relatively range bound. We've got specific highs. We've got kind of specific lows here. If the market is going to remain range bound, it's going to probably stay range bound inside the overnight high and low. And market's just open. We're still in value and in range. If we're going to remain range bound, again, my focus will probably be on the overnight low and especially that overnight high because it's relatively close. No, this is not the right chart here. I do this all the time, and then I just start yammering about it like I know what the hell I'm talking about. Here we go. So relatively similar situation. We don't really have a lot of overnight inventory. The market has opened inside range and value. This is our kind of rest area here. Okay, we do have an inside extended trading hour range here. We've got plenty of visuals to try and sop up down below. Weekly kickoff low here is 655. That would be a dream level. But again, just kind of looking at where we are and the fact that we're in rollover says it's likely to be more range bound than directional. Now that I've said that, the market loves to make a liar out of me. but I'm going to try and be patient and look for value low from yesterday, maybe a recheck of this naked point of control, and watching the high of the overnight session for opportunities. Yeah, Devontae could switch that around. It always seems to get messed up when I do that. Yeah, see, it's going to put it over in crude oil. I'll figure that out. Maybe I'll just put a whole new tab together for the nat gas, so they're not kind of smushed together. I think that would be a smart thing to do. Thank you for the suggestion. Yeah, the band should be the Yammers. The Yammer Jammers. All right. Well, I'm looking forward to hopefully a restful weekend. I'm hoping the same for all of you. So next week, Monday, group coaching. Tuesday, make Hogue money. Wednesday, group coaching. Thursday, make Hogue money. I'm looking forward to another good, fun week next week. I'm really enjoying the make Hogue money sessions. Again, I'm looking for suggestions and thoughts on improving it, making it better. So if you do have any suggestions, jhoagland@topstep.com. Kevin Laffey, if you're watching, send me an email, jhoagland@topstep.com. I'd love to have a chat with you. And I'm looking forward to another restful weekend. So, and we know we've got a lot of opportunities coming at us next week, and the weekend after, or the week after, is FOMC meeting. So, lots coming at us. Take your deep breath, and let's be ready for today. I always hope you guys do that with me. Stay grateful, creative, and humble in your trading today. Make sure you say a prayer for peace, and be kind. Be kind to yourself. Be good to yourself. We work hard at this. We deserve it. Be good to others, and have a great weekend. Blessings to you all.